Good morning, everyone. I'd like to welcome everyone to the Assessment Appeals Board for Tulare County for October 20th, 2014. If everyone would silence their phones, I would appreciate it. Number one issue on our agenda is board members, and we have a new board member. And Barbara, would you like to introduce our new board member?
Yes, this is Matthew Graham, and he is a real estate broker, and he's accepted the term that ends in 2015. So we need to pretend that we're nice so that he'll come back for another term.
And staff, any other comments, Barbara, that you have?
Marat has been second chair. She's just back from sick leave, so she's not coming over this morning.
Okay. And last but not least is our assessor comments? None. We're moving right along here. First item on the agenda is Jerry Depew. Is that applicant here today?
Mr. Chairman, Mr. Depew is not. We were able to reach a resolution with him late on Friday night. He said he was going to make an effort to contact the clerk, and he was unable to, but he is well aware that his presence, being absent here this morning, basically will equate to a withdrawal anyway.
Okay. So it's going to be a withdrawal?
Correct.
Well,
denial for non-appearance.
Yeah, we'll have to deny for non-appearance if we haven't gotten the actual withdrawal form.
Right. Why don't we go through the agenda and clean those up first? That way we won't have to go through this. So number 3 is a withdrawal?
Correct.
Okay. Number 4 is a withdrawal?
Correct.
What's status of number 5?
Number 5, I believe, is here this morning. So,
Okay. Is someone here from Golden West Restaurants? Very good. You'll be number 1 up as we finish going through the agenda. And IGT, are they here today? Very good. Number 7, is that a withdrawal?
7 through 12 are all withdrawals.
Good.
And then 13 through 15 as well. And then item number 16.
Is there here someone here from Charles Nichols?
Mr. Nichols?
In the hall with Steve Weiss.
Is Mr. Nichols here?
Yes.
Okay. Very good. Then we'll go back and hear agenda item number 5, Golden West Restaurants, DBA Applebee's. If you'd like to come forward. And we'll have the clerk swear you in first, and also the assessor. Anybody that's going to give testimony needs to be sworn in.
For this matter.
Over there, or
Not the later matters. We'll
He represents Golden West. I represent the assessor. So his question is, should he sit?
Oh, you're with the assessor?
Yes.
Well, Tim, you're going to swear in be representing all of the assessors?
But yes, we should have you at different podiums.
Right. Okay. So we'll have the applicant and the assessor sworn in. Clerk would go forward.
Okay. Mr. Chairman, if I'm particularly not providing any type of testimony this morning on this case because it's a business personal property.
What's your name, sir?
My name is Rick Rosales.
You're with the assessor's office?
Yes, I am.
Then we'll swear you in.
Okay.
Rick works in my office.
And you're going to be testimony with the case? Okay, both of you.
Raise your right hand. Do you solemnly swear or affirm that the testimony you are about to give in the matter now pending before the Assessment Appeals Board is the truth, the whole truth, and nothing but the truth?
I do. And so that we don't let too much time.
Hold on.
Mr. Ozunian. I'm not done.
Oh, I'm sorry. Go ahead.
Please state your name.
My name is Tom Bergeson.
Okay.
My name is Rick Rosales.
Okay. Then if the clerk will read in the application numbers, and also we'll have you state the purpose of the essence of your case is summarized, but I'll let the clerk read in your application numbers first.
Application number 2012-00768, APN number 800-243-256-100. Application number 2012-00769, APN number 800-246-256-100. Application number 2012-00770, APN number 800-243-256-100. Application number 2012-00771, APN number 800-243-256-100. Application number 2012-00772, APN number 800-229-109-100. Application number 2012-00773, APN number 800-229-109-100. Application number 2012-00774, APN number 800-229-109-100. Application number 2012-00775, APN number 800-229-109-100.
Very good.
Mr.
Well-
Chairman,
Yes.
we have a stipulation on one of these locations. There's 2 locations involved. So
Okay. Well, should we hear the steps first, or should we just hear the case?
it's up to you. I just thought I'd
It might be
mention that
tidier
so
to
they
do the
were
stip
only-
first.
Okay, let's go ahead and do that now then.
have the stipulation.
Yes. I'll read the stipulation numbers and I'll read the application numbers first, followed by the assessment numbers and the values that we have stipulated to.
Okay.
And I believe you guys have copies, right, of the stipulation sheet?
No, we don't have, they haven't been read in yet.
Okay.
We don't have copies of them. We
Okay.
do have copies of all the numbers. We'll note which ones are going to be steps, and we'll go from there.
Okay. Application number is 2012-00772. Assessment number is 800-229-109-000. The fixed improvements value is $281,605. The personal property value is $191,248. This is for the 2009 lien date. The net taxable value for that year is $472,853. For lien date 2010, the application number is 2012-00773. Assessment number is 800-229-109-000. The fixed improvements value is $423,565. The personal property value is $17,939. The net taxable value is $441,504. For lien date 2011, the application number is 2012-00774. The assessment number is 800-229-109-000. The fixed improvements value is $366,392. The personal property value is $20,083. The net taxable value is $386,475. For lien date 2012, the application number is 2012-00775. The assessment number is 800-229-109-000. The fixed improvements value is $335,056. The personal property value is $19,621. The net taxable value is $354,677.
So we have a stipulation on 4 applications, correct?
Correct.
Okay. Do I hear a motion to accept the stipulations?
Okay.
Who's on today? You know something? I didn't announce that. Let me
It's,
just make sure that I'm announcing that I am on today, Lance Morrison and William McKinley.
On applications number 2012-0072 through 2012-00775 by Gold West Restaurants, I move that we accept the stipulation as presented by the assessor.
I hear a second?
Second.
All in favor signify by saying aye. Aye. All opposed? Hearing none, motion carries. So now we're going to hear the case on the remaining 4 applications.
I'd like to ask a question
Sure.
first. Just to clarify with the assessor, the document attached to the application was not the notice of escape assessment. Are you accepting that these were timely? Because I don't have the correct document.
Yes, I believe we gave the worksheets to the clerk, and the date should be timely. I can send that to you
Okay.
one separate, but yeah.
Okay, so we're talking. I guess the question is who has the burden of proof?
Well, this is a commercial entity, so
So we're doing we're reopening everything after a 469 audit.
that's correct.
Okay, so they've got the burden of proof. Okay, thank you.
Okay? Yeah, now, if the applicant would give us an idea of what the issues are regarding the remainder 4 issues?
Okay, the issue involves an audit, and in this particular case, actually, I believe the assessor is required to go first in this particular situation. It involves escape assessments for 4
Well,
years.
That depends what you're appealing. If you want to, as you know, a 469 audit reopens everything. So if you're appealing the entire valuation from 2009, then that reopens the basic case, and so then the burden's going to be on you. If you're only appealing the little piece that's in the escape, then that would be different.
I am only appealing the escape assessment.
Okay, you've got $500,000 worth of property on your application. That's the escape?
Let's see. The escape assessment
Yeah, see, I didn't get that.
was the escape assessment is the only thing that I'm appealing.
And how much is the escape assessment?
Let's see. I have the audit here.
Barbara, do you have that?
I did not get that.
It's on the back of, I found mine on the back of this one.
On one of them?
0775.
Oh, that's the other, that's the
Look on the very
other,
last one.
that's the other,
Right, look on the very last page of it. Of application number 2012-00775.
Okay,
There you go.
okay. Okay,
Yes. This none. Oh.
well, this notice is dated March 22nd, May 22nd, okay, so that's timely. So you're just arguing the 100,000-ish?
No, the 529.
Oh, those are the escape
No,
assessments.
those are the escape assessments.
Okay.
So, in this particular
then-
situation, it is.
Then unless the assessor does the assessor have a counter argument on the burden of proof?
The assessor doesn't take a position on whether we go first or not. It doesn't, it doesn't matter either way. It was our understanding that when they when they appealed an audit, that it opened up the whole assessment for
Right.
appeal.
Right,
And so that's
right.
why our understanding was the burden of proof was on
Right,
the
that's
applicant.
what I was saying. So let me go back to the board then, unless your counsel wants to add anything. You've got two competing principles here. You have the usual rule in an escape assessment is that the assessor has the burden of proof and has to go first and show that the escape assessment was proper. The usual rule when you're appealing after an audit is it reopens everything. You can argue about all the stuff that the assessor could have changed the value on, but didn't in the process of the audit. And so you get a second bite of the apple to appeal everything. So he's saying that he's only going to argue about the things on the escape assessment list. So in that case,
Well, part of what I'm bringing in the thing are the property tax rules, and Rule 321 states that for an escape assessment, and that's all that is all I am protesting. The burden of proof is on the assessor, and also in the assessment appeals handbook. One of the 5 exceptions to the applicant having the burden of proof is when there is an escape assessment. Now, in one of the years, the taxpayer did not file in a timely manner, so in that particular year, the burden of proof would be on me. However, on the other 3 years, the burden of proof would be on the assessor.
If I could just basically summarize where we are, if we have the assessor go first on all of the issues, is that a problem?
No.
Okay. I'm going to poll the other board members. You don't have any issue?
The assessor has no objection.
No objection. Let's proceed with the assessor going first. Okay?
Thank you.
Candace, there's a handout.
Okay.
Candace.
We need
and Mr. Rosales, if I could get your exact spelling of your name and your title for the record.
My name is Rick, spelled R-I-C-K. Rosales, R-O-S-A-L-E-S.
And your title.
And Auditor Appraiser 4.
Thank you.
Okay. Mr. Assessor?
The appeal is based on a 2009 through 2012 audit that was done on Golden West Restaurants, doing business as Applebee's. If you turn to the very first page of the packet that you received, the assessor's opinion of full cash value is for the 2009 lien date, $1,403,565. For the 2012 lien date, it's $1,466,918. For the 2011 lien date, it's $1,234,329. And for the 2012 lien date, it's $1,186,841. The subject property consists of a bar and restaurant containing trade fixtures and personal property.
This is the one located on South Mooney Boulevard.
This is correct.
Okay, continue.
The street address is 3400 South Mooney. The equipment itself consists of kitchen and dining equipment, bar counter and related equipment, decor, and various trade fixtures for restaurants. The current values we have are located in Exhibit A. Those include the originally enrolled values plus the escapes that were generated from the audit. You'll see 4 pages, one for each year, starting with page number 5.
Okay.
Okay, I'm going to continue reading starting on page 2 from the top going down.
All right.
The approach to value that was used in the audit was the cost approach to value trade fixtures and personal property. The assessor is required by law to assess property at full cash value. Section 401.5 of the Revenue and Taxation Code requires that the State Board of Equalization issue to county assessors data relating to cost of property and other information to promote uniformity in appraisal practices and in assessed values throughout the state. Equipment index factors are developed for use in mass appraisals and are generally reliable and practical for converting original costs to estimates of reproduction cost or replacement cost new. Index factors are used to adjust a property's original cost for price level changes since the property was acquired. The index factors recommended by the board are updated and distributed annually. The tables rely on indexes published by the U.S. Bureau of Labor Statistics and on information published by Marshall & Swift, Beck LLC. The BLS and Marshall & Swift have indicated to SBE staff that their indexes attempt to track price changes for identical products sold under identical terms over time, such that the indexes approximate an estimate of reproduction costs new. Thus, when the original cost of property is multiplied by the board's index factor for the year of acquisition, the product typically approximates current reproduction costs new. Percent good factors are used in conjunction with the index factors to estimate reproduction costs new, less normal depreciation for the age of the asset. This approach allows for uniformity and equalization amongst taxpayers in similar industries, which typically have similar machinery and equipment. I'm going to start reading at Assessor's Opinion of Value. As I had mentioned before, the assessor audited Golden West Restaurants through the 2012 year. The audit was complete in March of 2013. The structure located at 3400 South Mooney Boulevard was completed in April of 2006 by the applicant and was built with restaurant fixtures included. The audit recognized $2,673,380 in year 2006 leasehold improvement and structure cost, allocated as follows. Structure base value, $1,250,000. Capitalized interest and miscellaneous building-related cost, $176,277. And industry-related trade fixtures, $1,247,103. If you turn to Exhibit B, you'll see a breakdown of how the audit allocated the cost between structure and trade fixtures. Page 10 has two arrows pointing to the trade fixtures that were assessed during the audit, which is what the applicant is appealing. In 2006, and mind you, these costs are coming from the applicant's financial records, their depreciation schedule, their fixed assets. They booked an asset called Visalia Build Out, booked April of 2006 for $1,093,433, and Visalia Build Out it's not number 2, but it's the second asset in April of 2006 for $153,670. If you turn to page 11, this represents the structure portion that was recognized in the audit as being the building. We got Visalia 2 build out, $96,805. We got Visalia build out for $1,250,000 and capitalized interest for $79,472. These assets were not valued in the audit, as they had been determined to have been valued as part of the base value of the structure itself.
Okay. And this building was built in what year?
In April. It was completed in April of 2006.
Okay.
Excuse me. I thought that the only issue here was personal property, not the structure.
The applicant is disputing the trade fixture value that we recognized in 2006.
Okay, but why are we worried about the building?
It's in an effort to show you that we have recognized in the audit a certain dollar amount above and beyond the base value that was recognized in 2006 for the structure, the real property base value, to show that we have been working with the applicant in not recognizing all their costs as trade fixtures.
Okay, we're concentrating on trade fixtures, right?
Yes, correct.
May I make one minor correction? The building was actually completed in January of 2006.
Okay.
The 4006 was just the date that they recorded it on the books.
Okay.
Your trade fixtures, you came out of Marshall and Swift with those?
No, those trade fixture costs came from the applicant's financial records, their depreciation schedule.
Okay, thank you.
Okay. Are you summarizing now, or?
I'm still summarizing, but I still need to present a few more facts.
Okay, go ahead.
The applicant's opinion of what represents trade fixture costs for acquisition year 2006 is $619,428, or it's $627,675 less than was recognized in the audit, and you'll see that in Exhibit C. This is a spreadsheet that the applicant provided, and what is their opinion of what should have been recognized in the audit as trade fixture cost. You'll see in a cell block, $619,428. That's the amount of cost that the applicant wants us to recognize as solely being trade fixtures.
Repeat that, please.
There is a figure in the spreadsheet for $619,000. It's in a bolded block.
Okay, gotcha. All right. So I see it.
And there's a small note below it, and that is the basis or the cost that the applicant wants us to recognize as trade fixture cost.
All right.
Thus, that would reduce the values that were determined in the audit. The applicant has provided a year 2006 budget forecast from the building contractor that provides a description of the work that was completed, and this is a projected budget forecast, and this is in Exhibit C, and it provides a breakdown of the cost that the contractor.
Sorry, I think you mean Exhibit D.
Yes, I'm sorry, Exhibit D. The total budgeted forecast came out to $2,207,451, but the actual cost per the audit was $2,673,380, or $465,929 over budget. This budget cost overrun has not been explained by the applicant, nor have invoices been provided to explain what it is. In essence, we recognize that cost budget overrun as trade fixture costs in the audit, but there hasn't been an explanation or invoices to represent what those costs were incurred for. Therefore, we have recognized them as trade fixtures. This budget overrun represents actual costs rather than budgeted amounts and should be treated as restaurant trade fixtures since the applicant has failed to provide documentary evidence to dispute the type of assets. Per Revenue and Taxation Code 75.5, fixtures are normally valued as a separate appraisal unit from a structure. In addition, R&T Code 405 states that annually, the assessor shall assess all the taxable property in his county except state-assessed property to the persons owning, claiming, possessing, or controlling it on the lien date. The assessor is willing to work with the applicant. The assessor contends that an additional $161,746 in costs should be recognized as included in the real property values, resulting in the following reductions of value. For 2009, it's $140,424. For lien date 2010, it's $158,349. For 2011, it's $134,249. And for 2012, it's $127,779. With the addition of the above amounts, there is a total cost of $388,023 that is not considered to add value to the real property. Hence, the applicant spent $388,023 that is not being assessed if the board agrees to reduce the amounts accordingly. And if you reference Exhibit E, there's a figure in the middle for $1.2 million that represents the structure cost for the building. That was the base value cost back in 2006 that was enrolled by the real property crew. And if you go to the very last page, which is page 20, the taxpayer back in 2006, they reported to us $1.25 million in structure cost, which was recognized in the audit. We are willing, or we are recognizing, based on what they reported to us, an additional $388,000 above that $1.25 million in structure costs. So we feel we're recognizing more than what the applicant has reported to us, therefore showing that we have recognized more in real property cost than what they reported to us.
Okay?
I'm done. Thank you.
All right, typically, what we do is we let the either applicant or the assessor make their case, and then the opposite make their case, and then we'll have a period of time when each of you can ask questions and add to it, and then a summary. So if the applicant will present their case.
Okay.
You
actually,
can't
I
allow them
do.
to cross-examine first, I mean, before they do their case.
What would you like to do? Present your case
I
or
would
cross-examine?
prefer to present my case, and I've got.
Okay.
Or if the board has questions of the first witness.
Okay.
Does the board have any questions
I
at this
have.
point of the assessor?
Yes.
Okay. Why don't you go ahead and hand those out and go ahead and answer your questions?
All right. On your assessment, as I understand what you're saying, is that they told you that the building was going to cost so much. Then, when it cost more than that, you assumed that the excess went to fixtures.
Correct.
Is that correct?
Correct.
Okay. Does your audit show anything about what those fixtures are?
The applicant on their books did not break down trade fixture items uniquely. So typically in a bar and a restaurant, you might have like a walk-in cooler, you'll have counter equipment. They booked very general descriptions on their books, and it's called Visalia build-out. And they're for very large amounts. And because of that, we never were able to get a breakdown, even during the audit, of what those Visalia build-out costs were for. So to answer your question, no, we did not get a unique breakdown for those trade fixtures.
So, you're establishing this based on cost, not on market value then?
We're basing it on
Cost plus the index?
yes, on the difference between what their invested costs were and what we recognize as structure base value for the building.
Did you have any evidence to say that this all didn't go to construction?
Can you repeat that, please?
Total amount that you're assessing, part of it you allocated to the building, part of it you allocated to fixtures.
Correct.
Do you have any evidence to say that what wasn't, do you have any evidence the excess went to fixtures?
The evidence would be their financial records, their depreciation schedules.
Their depreciation schedules show another $300,000 in trade fixtures?
It's under a description called Visalia build-out. Yes.
Under what?
Visalia build-out.
Visalia build-out.
Okay.
Exhibit.
Lance, do you have any questions?
No.
Okay. Typically, as I understand it, let's say you're going to build a restaurant and you're going to put in a cold box. All of a sudden you get there and the cold box don't fit. Or maybe the space was bigger than what the cold box was. So you frame in and construct an area to accommodate the cold box that is more money than what they originally had, and the excess would be what? Trade fixtures or real property?
The excess would be interpreted by our department as trade fixtures.
To accommodate the trade fixture.
Correct.
Okay.
We do look at the building record to determine if the real property crew picked up any of those improvement costs as real property. If they did not, we work in conjunction with them to determine that anything in excess would be considered a trade fixture to accommodate that cold box.
I understand. Okay.
Okay, on mine, actually, I have used many of the same schedules as Mr. Rosales, and one of them, in fact, was provided. One of my schedules is his Exhibit D is, I've got the same thing. Anyway, first of all, one of the unusual things about this was it went from permit to actual opening in 84 days. So it's something that obviously couldn't have occurred in San Diego County where I live, but obviously you folks are better at getting things done. Anyway, what I had done on my list is I had first of all, I had taken the audit, which is number one, and actually it's the areas where I have this, the areas of contention are exactly the same ones that Mr. Rosales had indicated. It was the Visalia build-out and the fact that it says anything that was not on the real estate was assessed originally on the audit. And that included demolition, the drinking water for the workers, the project administration, and a lot of items that were not actually capitalized as the building. And he actually has agreed to make a reduction based on based on some of the general conditions of the facility. However, I actually spelled out my specific recommendations on here on the summary, and then actually the fixtures are on back. I had revised them somewhat, but I'm willing to accept the fixture value that Mr. Rosales had come up with. And instead, I actually identified what fixtures were in there. And so I came up with a value of $596,864. I would be willing to go with $600,000. Primary, I would say the difference that I have is I had made slight difference in the finish plumbing, which is basically the plumbing that you put for like at the bars or you'll have in the kitchen. And also the finish electrical, which is the specialized lighting that you have in the Applebee's. The initial audit showed nothing as far as what fixtures. It just took everything, all the costs, and said if it's not a cost, it's got to be a fixture. And additionally, there was no allocation for things like architectural or interior design costs. And that was an item, those were items that were bundled into the Visalia build-out, the same thing as you have there. And when I say interior design, I'm not saying interior decorating. I'm talking about design of like where the plumbing is going to go, where the emergency exits are going to go, because most of the Applebee's are very similar in design, but they are not exactly the same, because when you get it on a pad, you might find that you have to put the entrance in a different area, and that can make that makes the whole thing, as far as where the restrooms are going to be located, different, and also your emergency exits different. And otherwise, the Applebee's are fairly common, is that they have the bar in the center, and then they have the dining areas around the sides. Granted, the new the Applebee's on Mooney Street is considerably newer, but I just cannot imagine that it would be anywhere in the neighborhood of 2.5 times the value of the other Applebee's that you have in your county. So that is the basis of my argument, and
Well, any questions that you have?
I will have, I'd like to listen.
Okay, that's pretty much what you
So,
you have my rebuttal.
Let me understand this. We have 4 years, and what is the difference between the assessor's value and what you're indicating the value ought to be? How much are we arguing about in each year?
The difference is about $230,000 to $250,000 per year between what the assessor has recommended and what I am recommending.
And
So the numbers on your application mean nothing then?
that's what I was getting at.
Yeah, the numbers on the application, that is something that we had to put down, and that was before we had the information that I had to get from the contractor in Colorado.
You're saying that the total cost is down by $230,000? Or just the allocation?
No, I mean, I feel that the fixture value is that the assessor has is about $230,000 too high. Initially on the audit, I felt they were in the neighborhood of $600,000 to $700,000 too high, but they have agreed that many of the items are not fixtures, and the area where we have a disagreement basically is anything that was involved in an overrun or didn't have any description would have to be a fixture. And
So in other words, if I'm understanding this correctly, we're not really arguing about the total value of the land, building, and fixtures. We're arguing about the breakdown between them. So in other words, if you have that $250,000, $230,000 less in fixtures, are you arguing that that is an additional value that is attached to the building?
My feeling is that it would probably not be, because there would be items such as consulting and as I say, and architectural costs and interior design costs that
Are not attributable to this location.
that are attributable to this location, but were not picked up by Realty.
Okay. All right. Any other questions now from the panel?
I'm sorry, I'm having trouble figuring out what you're saying. Obviously, architectural costs are a cost of building a building. Why shouldn't they be allocated to the cost of the building?
Well, I wouldn't have an objection to it being allocated to the cost of the building. I didn't think it's something that, for federal tax purposes, does have to be depreciated. So,
Yes. All right, now, on the building build-out thing on your depreciation schedule.
Yes.
If I say you build out, what class life are you using for depreciation?
For which class? Building or equipment?
Well, he said that they were combined. In
Okay. All right. Good question.
well, let's. They are using 15-year life.
15-year life.
They're depreciating it over a 12-year life, according to the asset listing you guys should have.
Okay.
So you're building the entire build-out cost. You're depreciating over 12 to 15 years.
He's doing it over a 15-year life.
Pardon?
Yes, he's correct. In the audit, it does get a 15-year life. The trade fixtures do get a 15-year life, and on their asset listing, it's a 12-year life.
I keep having this water balloon concept. If you push it in here, it comes out here, type of thing.
Exactly.
So what I'm hearing is that there was so much money spent on building, okay, and fixtures. There's a total amount. Now, either that cost either goes to the building or it goes to fixtures. Is that correct, or am I wrong?
You are correct.
Okay. So, and you're agreeing or disagreeing?
I would agree.
All right. So that means that if you're going to take it off of the fixtures, you're going to have to put it back on the building. Is that correct?
If it's something that's accessible by realty.
Wouldn't you want it well,
I mean, if it's an
wouldn't you want it
accessible realty
I shouldn't
cost,
ask that question, I
things
guess.
like, as I say, I don't think
You know what I'm coming to,
demolition.
right?
Yes, and if I can just advise the applicant while we're here, you understand what you're asking us to do, correct? Because if you take it off of the fixtures, which are depreciated annually,
Yeah.
you're going to
they
put
go
it
down
onto the
quicker.
realty, which is appreciated by as much as 2% annually
It
for your
is.
client. And if you're aware of that, it's fine. I just want to make sure that you're fully aware of what you're asking
Because
us to do.
ultimately, it would increase your tax bills, dropping it.
Into perpetuity.
I think also the fact that this was built right at the height of the market, it would have gone. It probably the value of the building would have gone down.
Any evidence of that?
No, I do not. I'm not.
That's
I'm
the
not.
next question I was getting.
That issue
No,
isn't
no.
before us anyway.
Essentially, what I was the areas that I was considering were, first of all, items that should not be considered in the value of the building, and that would be the general conditions such as demolition and land improvements.
And I believe the assessor is taking that into account, not only by recognizing $388,000 above what their booked costs, what they reported to us on Exhibit E, the very last page, which is page 20. Keep in mind, they reported $1.25 million to us, and we're going $388,000 above that to account for those demo costs and land work.
I'm wondering
Yes.
if it sounds to me like there's a stipulation, not express, but admitted stipulation of $232,000 being taken from the personal property, business property, and moved on to the real property value, and that we could just kind of shortcut this whole hearing by so
agreeing to a stip.
stipulating.
But it would actually be $161,746.
Additional.
Additional costs being moved over, which is on page,
Per year?
which is on page 3, yeah.
Per year.
Per year, yeah. And that is cost, and the values are reflected. The adjusted values based off of that cost are reflected in the years on page 3.
So as you can see on page 3 in the paragraph, they've got the cost of $161,000 and then the value
Right.
each year.
Now, here again, the assessor's talking over here. What do you think?
Judging from how the hearing is going, I would say I would be more willing to accept what the assessor had recommended than to add anything onto the real estate.
Right. I understand. So if that's the case, is the assessor prepared to make a stipulation, or should we continue this until you are?
We should continue so we
Okay.
can review the facts.
I would also request, one of the things that made this presentation confusing is we only heard the personal property values. The board has to report to the tax collector every item that's listed on the property, so we need the presentation to include real property values as well.
This is an unsecured assessment, and so the
Right.
assessment does not include real property. It's just that they did improvements that went towards the real property.
They don't own the real property?
So it's a separate
No.
assessment.
They
don't
do
own the
not.
building?
Property.
Right.
Yeah.
They
So
don't own
we
the building?
have this, these are just tenant improvements,
Okay.
and in effect, some of those tenant improvements, or all of them, are fixtures, depending on how you want to look at it, or some of them are fixtures and some of them are
So
what?
if it's moved over to real
It's-
property, it's billed to somebody else?
Related party, I believe, right? The owner of the real property, the land and building that you put.
I don't believe it is now because the business had been sold. So when I had done my research, I was having to get my information from outside sources, which is why I actually had to go to the contractor in order to get the actual costs, because what they anticipated the initial cost of the restaurant to be was considerably higher than what it ended up being.
You mean the other way around?
What?
You just said it, they estimated a higher cost than it
Sorry,
actually cost.
the costs were higher than they originally estimated.
Okay, well, if that's the case, then we will continue this until our next meeting in 30 days. Is that okay with everyone?
That's fine.
Which is our November meeting, and I don't have a schedule here.
I don't have that
Date
page up.
with me.
17th.
17th, November 17th. Is that agreeable with everyone?
That is?
Okay, and the assessor? Then we'll go ahead and bring this up at our next meeting, November 17th.
Okay.
And for a stipulation that'll bring this to an end.
Okay. Thank you, Chairman. Thank you, Board.
Thank you. Okay, next item is agenda item number 6, IGT Inc. Is there an applicant for IGT? Okay, and if the clerk will swear you in?
Does this involve,
And if
Mr.
there's,
Kuchendarfer, does this involve real property?
that's what I was going to get
No,
to.
ma'am.
Okay. So we won't need to re-swear the
No, I'm just helping her.
assessor's witness.
Rick's out there with him.
Okay. Raise your right hand. Do you solemnly swear or affirm that the testimony you are about to give in the matter now pending before the Assessment Appeals Board is the truth, the whole truth, and nothing but the truth? Come up to the microphone and state your name.
Charlene Nishimura.
And Elisa Lawson.
Welcome. If you can give us a summary of what this case is about, we would appreciate it.
Okay. My name is Charlene Nishimura. I'm the Sales Use and Property Tax Manager at IGT. And the issue that we're appealing today is basically to present the additional documentation related to adjustments that we're requesting that we were unable to present to the auditor at the time of the audit.
Okay, and those adjustments are what?
There were 3 issues within the audit on there. IGT is the manufacturer of electronic gaming machines or slot machines that are located at casinos around the country on that. The slot machines at issue are machines that were located at Eagle Mountain Casino here in Tulare County.
So you guys are making those machines that we all enjoy using, huh?
Yes, we are.
Okay.
On
Continue.
that. They're beautiful machines. The way IGT treats its leased
I'm
assets.
sorry, may I ask a couple of preliminary questions? Are you going right into your full presentation? Or are you summarizing?
I'm doing whatever you would like me to do.
Because again, as in the prior one, this involves an appeal after an audit.
Correct.
So are you appealing the full value of everything on the original assessment?
No. Here's our packet here, and we have a summary of what the original assessment was, how much we actually agree with, and how much we're actually appealing.
In that particular case, then, does the assessor, like the previous one, go
Well,
first?
that's the question, is are you only appealing the escape assessment?
Yes, we're only appealing the escape assessment, the additional values that were being assessed.
You're not reopening other assets?
We are not reopening other assets. We are withdrawing any other issues on that and basically presenting documentation on 3 related issues regarding assets located at the casino.
That would be the same position
Situation.
then, is that the assessor would need to go first because it's purely the escape assessment.
Stay on now for.
If that's the case, then, are you going to go ahead and present?
Yes.
Okay, go ahead.
Get next. Okay, on page 1 of the appeal, this is for IGT Incorporated. They're a leasing company, as the applicant stated, that's leasing equipment here in Tulare County to Eagle Mountain Casino. The property is unsecured personal property located in Porterville. The address is 681 South Thule Reservation Road. The property is comprised of electronic gaming equipment used for gambling activities. The property is leased to Eagle Mountain Casino by the applicant. The total property value it's all under personal property, and the current total value, this isn't just the escape amount, this is the total value on the roll, ranges from in 2009 to $2.3 million, and in 2012 to $2.1 million. In 2012, an audit was conducted for the 2009 through 2012 lien dates, and following are the issues of the applicant as far as we're aware. First of all is taxability. According to Revenue and Taxation Code, Section 401, well, the applicant's position is, as I understand it, I'm not meaning to speak for them, but is that because it's leased to an Indian gaming casino, they're questioning if it's even taxable at all. So my response to that is, according to Revenue and Taxation Code 401, every assessor shall assess all property subject to general property taxation at its full value. Unless something is considered exempt by the state of California, then it is taxable. As far as Indian gaming equipment, of course, the Indian reservations are not taxable because they're immune from taxation, but the equipment to the leasing company is taxable. Article 13 of the California Constitution does not allow leased gaming equipment to be exempt from property taxation when assessed to a leasing company. Revenue and Taxation Code Section 405 provides assessors broad authority to assess either the lessee or the lessor. In this case, we've assessed the lessor. Although the issue of taxing the lessor of equipment leased to an Indian reservation has been brought before several courts, currently there's no federal law preempting local jurisdictions from taxing the lessors in these situations. Exhibit A is a memo from 2003 from the State Board specifically stating that an assessor has the authority to assess leased equipment under a long-term contract to the non-Indian lessor. So I don't know if you want to read through that, but basically it's just a directive from the State Board, kind of clarifying the issue since it's been brought up several times. The second issue, well, if you go, just to kind of get into it a little bit, if you go to page 7, halfway down the page, or a third of the way, I guess, where it says yes, I'll just read it. It says, yes, an assessor has the authority to assess leased equipment under a long-term agreement to the non-Indian lessor. Pursuant to Revenue and Taxation Code 405, an assessor is authorized to assess the owners and or the persons in possession or control of the taxable property. So basically, it's just what we're directed to do as assessors. The second issue that I understand on page 2 is trade level. Since assessors are required to assess property at the market consumer level, which is the amount of cash for which the property transfers if exposed for sale on the open market, most counties throughout California apply a trade level adjustment to IGT's equipment. This creates uniformity amongst taxpayers. According to Property Tax Rule 10, tangible personal property leased, rented, or loaned for an extended but unspecified period or lease for a term of more than 6 months, having tax situs at the lessee situs, as provided in Regulation 204, shall be valued by estimating the cash price or its equivalent for which the property would be sold at fair market value to an outside customer operating at the same level of trade as the lessee. In 2004, IGT's Director of Tax confirmed to Lassen County that IGT reports the manufacturer cost rather than the retail cost because they expect the trade level adjustment to be added by the counties. Please see Exhibit B.
I'm sorry, would you say that last sentence again?
Please see Exhibit B. Sorry. It's loud when I talk close, huh? So you can kind of tell from this little email that I've forwarded, it's just a confirmation from Steve Libke, this is from Lassen County, that they are basically saying that they spoke to the tax director. It's just confirmation of that. I did have to white out some portions of this because of confidentiality. It talks about another taxpayer, so that's what that's about, in case you're wondering. During the course of the audit, it was determined that a 1.5 plus sales tax and freight was a fair trade level amount to apply. Although slightly lower than Riverside County's calculation, it seemed fair and reasonable in comparison to other counties. Riverside's calculation can be seen in Exhibit C. These are just references so that you can kind of see what other counties are looking at trade level. The third issue, that's my understanding, is removed assets. According to the applicant, there were assets that were removed from Eagle Mountain Casino that are reflected and assessed in the audit results. Exhibit D gives you the audit results, and it lists all the equipment that was assessed during the course of the audit. These aren't just the changes, but it lists all equipment. So anything throughout that exhibit D, or the audit results, that has a 1 next to it are going to be items that they're saying are no longer there, but we have assessed. During the course of the audit, it was requested on several occasions that the auditor be allowed to conduct an inspection of the equipment. The auditor was never allowed to visit the location to confirm whether or not the machines were actually removed. According to Assessor's Handbook 504, a tour and inspection of the property being audited or appraised contributes to the audit in the following ways. Number 1, confirms the existence and location of the property. Number 2, confirms the correct classification of the property. And number 3, verifies the condition of the property. Number 4, verifies that all property is recorded in the books and or records on the property statement. And number 5, that all property on the books actually exists at the location. And the last one is verifies that valuation of the property as a whole is reasonable and accurate. Although the casino is open to the public, as you can see from the audit detail results in Exhibit B from descriptions, there would be no way for the auditor to identify the equipment without a representative from IGT or the casino to identify a sampling of those items. As an alternative, the assessor will often request shipping or transfer receipts to show that the equipment has been removed. The representative from IGT only provided internally generated removal orders, which are not valid audit evidence that the equipment was removed from the premises. Basically, a spreadsheet was provided that had notated on the side items had been removed, and that, isn't solid evidence for us. IGT was notified in December 2012 that the equipment would be assessed if the documentation was not received, since a situs visit was not allowed. The audit results were issued 2 months later than the removal orders were sent by IGT on the spreadsheet, which again did not provide valid audit evidence as removal. Based on the above information, the assessor's opinion of value is the total taxable value as currently enrolled and listed on page 1. Thank you.
Okay. Any questions that board might have of the assessor? We'll move on to the applicant.
And I need the correct spelling of Ms. Chimura's name.
Nishimura. N is in Nancy. ISHIMURA.
Okay, and Charlene is?
CHARLENE.
And your title was Property and Tax Manager?
Sales, Use, and Property Tax Manager.
Thank you very much.
Okay, you have presented us with a package. If you'd like to present it.
Okay. First of all, I would like to just make a brief comment regarding the assessor's presentation. She listed 3 items that we had initially appealed. We are withdrawing the appeal on the taxability issue regarding Native American machines and also on the trade leveling issue. Today we're here just to talk about the assets that were located at Eagle Mountain Casino and the adjustments that the auditor made in the schedule due to lack of documentation on that. IGT has a large leasing business throughout the United States. We have casino operators in more than 40 states, and we have Native American casinos in more than 20 states that we provide leasing machines. Our Native American business is 33% of our leased assets on that, so it's a significant amount of our assets. As such, IGT is a strong partner with the Native American tribal communities and greatly respects the tribal sovereignty. We were unable to, at the auditor's request, we were unable to provide assistance in viewing the assets. We did actually make the phone call to contact our customer, but they decided that they actually refused to even acknowledge our request to bring an auditor on their premise. This is a very common theme with all of our Native American customers regarding the tribal sovereignty. They will not acknowledge, respect a request to bring anybody out that they do not deem has the authority to be out there. So we were unable to provide assistance with the auditor at getting to the casino to do a physical inspection. During the course of the audit, unfortunately, we had other audits going on at the time, and we were not able to timely provide the documentation or discuss the auditor's concern for the documentation that was provided. So we are here today to provide the additional IGT official records regarding the placement and removal of the machines. There are 3 basic within the removed asset category. There are basically 3 issues with the machines. Because our machines are part of a leased inventory, we run under a premise that the machines, once an asset, always an asset on that. Our leases with both our Native American and our non-Native American customers are open-ended leases. We require only that the casino keep the leased machine on the floor for a minimum of 30 days. After that, if the machine is continuing to perform, the lease will continue on. We do our revenue based on either a percentage of the contribution into the machine, a percentage of the net win out of the machine, or a daily fee for use of the machine. And that's what we base our lease revenue on. So the operator controls how long the machine is going to be at the casino on there. Once a casino operator decides that the machine is no longer producing the desired revenues or the desired outcome that they want, they'll notify IGT to remove the machines. When IGT does remove the machines, we bring them back to our manufacturing facilities. We have plants in both Las Vegas and Reno. Those assets are placed back in leased inventory until another casino wants to have leased machines. At that time, the machines are redeployed to another casino in another jurisdiction. So they may enter and exit jurisdictions over and over again through the life of an asset, and it will in no way be tied to the date that the asset was originally capitalized. So at question here are machines that were capitalized prior to them being placed at the Eagle Mountain Casino, so that the date that we actually placed the machine does not tie to the capitalization date. What we found in reviewing the audit schedule is because of lack of documentation, the auditor backed it up to the earliest lien date within our audit period. The second issue is assets that were removed from the casino during the audit period, but because there was no physical inspection and we were unable to provide the audit documentation during the audit, the auditor continued it through the entire audit period. The third issue, and there's only 4 assets involved in this one, is basically what we call reconfiguration cost.
The what?
It's refurbish or reconfiguration cost.
Okay.
And basically, these relate to the big signs that you see over the machines. You'll see a progressive meter that goes in for the big jackpots and the big signs that will be over a bank of the machines. There's times while the asset is actually physically at the casino that sign needs to be repaired or reconfigured if, say, we're doing a slightly different promotion with it and changed over. They will come in. They will add cost to the asset. The original asset is capitalized at the value that we purchased it with the signs we actually purchased these, and it's capitalized on the date it's placed in service for the original amount. When we add reconfiguration costs, we capitalize this as a sub-asset, but we capitalize it at the date that those costs were incurred. So we have 4 assets on the listing here where we incurred cost after the original capitalization date. So in the first year, we reported a lower value of what we purchased the sign at, and in, say, year 3, we added additional value to it. And because the auditor saw the additional value, he backed up that value to the first year. And again, this documentation was not able to be provided to the auditor before he needed to close the audit. So he advised us to gather the documentation, appeal it, and present it here. So what we have...
What was the reason for increasing the value again?
If a sign needed to be repaired, or if we needed to make changes in the signs. We reuse the signs at different locations on that, but we may change a little bit of the layout.
And then the cost of that you capitalize?
The cost of that is added to the asset
Okay.
and capitalized. We call it a sub-asset so we can track the difference on there.
Now, if I'm understanding your presentation, we're not disputing the value of the assets that were installed to begin with.
No, with the exception
Right.
of the 4 signs.
We're arguing the first issue that you brought up was the date.
We are accepting the trade level that was applied, and we're arguing the auditor backing up the date where we put it on for a lien date of 2010. He backed it up for a lien date of 2009, as one example. Or where we removed it in 2010, he included it on the lien for lien dates 11 and 12.
Right. Any other questions from the panel?
Are you through?
I'm willing to answer your questions. Yeah, I'm
Go
pretty
ahead
much
and-
through.
Go ahead and finish now.
I was just going to walk you through our the documentation that we have here for you. Again, we have the summaries of the audit reports that the assessors provided in the package on that, and that's in your first thing. We've identified in the escape assessment is listed as A minus D, or subcolumn E, the amount of the additional amount that's being assessed on the escape assessment. Item F is the amount that we're disagreeing with. And then the difference, or E minus F, is the amount that we're actually agreeing to on the escape assessment. And that, I
Amount
believe, is
what?
primarily trade value, or trade leveling.
Sorry, explain again what you said on E and F.
E is the amount of the escape assessment, the additional amount that the auditor has added value for us. And F is the amount that we're disputing of the escape assessment.
So you're disputing a total of $50,000?
We're disputing 550. You'll have to excuse me, my glasses don't focus well. We're disputing for 2009, we're disputing $550,000, and we're agreeing to $555,000 of value.
Okay,
So F is the dispute.
F is the dispute.
Okay.
And then the one that says difference at the bottom is the amount we're actually agreeing to. Okay. In your packet behind that are the different filings and escape assessments to support the numbers on the summary packet. If you'll turn over into the center section, on the left-hand side is a summary schedule F, and it's a summary of everything that we're disputing. On the right is a detailed asset listing by asset number, listing the items that we're disputing. We've identified our documentation numbers, both our return orders and our delivery orders, plus the serial number on the machines. As a highly regulated business, we not only track these assets by asset number, but every machine that we manufacture, whether we lease it or sell it, has a serial number that is used for tracking. So our internal documentation will all track it by serial number.
So these assets were not part of your original filings with the property tax reports that you sent to the
These
county?
assets were part of our filings. What happened is we filed one asset for the year 2000 on a lien date for 2010, but it was capitalized prior to that, so the auditor backed it up and added it to our lien date of 2009. So we're not disputing that these assets were ever at Eagle Casino. We're saying that they were on our filings. They were on our filings correctly for the time period that they were at the Eagle Mountain Casino. But because the asset date or an asset value differed on our records, the auditor made adjustments to it, adding it to other lien periods or not removing it from other lien periods.
Any other questions?
Okay. On the last two tabs here, we've included some sample documentations to try to explain the errors in the detailed documentation. If you'd like to look at that, I can walk you through it. If you'd like to leave it for the assessor and the auditor, I'm happy to do that too.
I'd like you to walk us through.
Okay. On that, for the last packet, on the left-hand side, we have one page from the auditor's schedule. We've identified two assets on it. The upper asset is a gaming machine. This gaming machine was placed at the Eagle Mountain Casino during the period of 2009. It was actually delivered on April 21st of 2009. Underneath the schedule, we have our internal delivery documentation that shows that the asset was serial number 1915424, and it was set up for delivery to the Eagle Mountain Casino on April 21st of 2009. In this case, the auditor backed it up and assumed that it was there for the lien date, was it 12/31? On 12/31/08 for the 2009 filing on that. So he assumed...
And that's because in your first column here that lists 12/2008...
That is the capitalization date of the
That's
asset.
sort of the date you put it on your books.
December of 2008 is the date we put it on our books that we capitalized it, but that doesn't mean that it was at Eagle Mountain Casino because it would have come back from another casino and then sat in our warehouse.
Or possibly have been brand new and you just hadn't got it out to a casino yet.
Okay. One of the things about our machines is when the asset is complete, we do not keep a new inventory of machines. When we build a new machine, it is built for a specific customer or specific lease.
So whatever date you first list is the date it's gone out to. It's a first casino.
Right. We capitalize and put the costs on our books at the time that we're initiating the delivery outside of our warehouse to the first casino. On that, some of our
Until then, it's just like inventory.
Right. Some of our machines will be at a casino for 35 days. Some of them will be there for several years. Okay. Page 2 in that is as I said, is the actual delivery documentation. It is IGT's official records on that, and showing that we are issuing out that serial number. We track everything by serial number on that. It shows that the tracking numbers for shipping, it went out from FedEx. On that, and it shows the other serial numbers for the other machines that were actually included on that order. On that. Okay. Just for reference purposes only, we gave you a screen print of our assets showing the asset costs and the time and the capitalization date of when we capitalized it. And then the fourth page is our removal order. And this is our official documentation, again, with shipping and information on it to show that we picked up the asset on April 14th, 2010, to remove it from the casino, take it out of service, and return it to our inventory. Okay. The second marked asset on that is also a gaming machine. It was placed at the Eagle Mountain Casino on January 28th of 2009. The rendition for 2010 was correct. The asset was removed later in 2010, which would be the last page of the example, showing that on 9/15/2010, shipment was arranged to bring the asset back from the Eagle Mountain Casino. We have on our F detail listing, we have 168 assets. We have this documentation. We have every return order and every placement order for all 168 assets, whether we're disputing whether the asset was placed after the capitalization date or whether we removed it. On the detail order, on the final column, we put an issue. We've identified what documentation that you're looking at, and then at the bottom of the schedule on page 4, we've briefly summarized each of the issues for what removal, prior year, or refurbished value is, and which documentation to look at. We came here today with printed copies. You got my printed copies? Can I have them in my hand? We have printed copies of 168 to support 168 assets, and we have 8 flash drives with electronic versions of our documentation. We respectfully ask that this documentation be reviewed and we get the adjustments to the assets to correctly reflect the period of time that they were at the Eagle Mountain Casino.
I have a question.
Sure.
I'm sure that you're getting audited in a number of different counties and a number of different locations.
Right.
Is that correct?
We're getting quite a few property tax audits from California, yes.
Okay.
On that, in addition to sales use and other audits.
This evidence you're presenting regarding the time that it is there and the time that it is picked up, does any of the other jurisdictions challenge that?
We have never had a challenge to our removal and delivery documents. They have been accepted as official IGT records because we view them as official IGT records.
Okay. Is your rental value that you get off of your machines coincided with those dates?
The billings to our customers for the rental coincide. Once a machine is turned on, depending on the method that we charge, as I said, we had 3 different revenue models for the machines. The machines are billed weekly or monthly. We will.
But in other words, what I'm saying is that you have, let's say, an order to pick a machine up. Okay. Does the revenue stop on that machine on that date?
Yes.
Okay. That's what I want to know.
Or it may stop 1 or 2 days prior to that. There's sometimes a difference from when they notify us to pick up the machine and that they're taking it out of service to when we actually physically get the truck there to pick up the machine.
So the assessor hasn't seen these 168
The assessor has not
documents?
seen this, and we apologize for that, but we were unable to provide it to the auditor during the period of time that the audit was going on.
Okay.
I have a couple of questions.
No, go ahead.
When was the audit completed?
Beginning of 2013.
March was when they sent the enrollment.
Yeah, I was trying to look for the exact date of it.
Yeah, we were communicating that.
I don't have the date in my
I
packet.
I
but-
don't understand why between the time that the audit was completed and today you couldn't have provided this information to the auditor.
We were given an email from the auditor that advised us to file, that we would be getting the escape assessment, to file the petition or appeal of it within 60 days and to present it at that hearing when we sought to the auditor for extensions. We tried to explain to the auditor and tried to explain that we were overtaxed we had both our Nevada, which is where we keep our 2 large manufacturing plants, and the state of New Jersey, which is our second largest state as far as gaming. On that, we had both of the auditors in during that period of time conducting sales tax audits, and so we were taxed as far as the ability to stop and pull records for this audit.
Your original filing with the application, you went through 2 issues that I don't think you're bringing up. One was the taxability, but apparently you're saying, well, that's okay because we've accepted this on the beginning assets.
On the taxability had to do with us raising whether assets placed in service on the Native American casinos and used in their gaming operations were actually subject to California property tax.
Are you bringing up that issue as a defense?
We are not bringing up that issue at this time. I have had discussions with several assessors, I don't believe this county, but with other counties on the other on this issue, because we have raised it in appeals letters. Right. And on that, we have been advised that this is not the forum to address it in, that this has to be litigated prior to that. This issue is being litigated in other states. At the time we filed the appeal, there was a positive ruling in the state of Connecticut indicating that the gaming assets were should not be assessed because they were part of the Native American gaming operations. However, that ruling has now been overturned on appeal, and at this time, IGT is not willing to be the driving entity to take this into court, so we are withdrawing that.
Are you questioning the values that have been placed on this?
We are not questioning the values, with the exception of the auditor taking our reconfigured cost on 4 separate assets and backing it up to the original capitalization.
That's a timing difference. That's not a value difference.
Right. That's a timing difference.
Okay, do you manufacture these equipment?
Yes, we do.
All right. So what you're saying is that your cost is equal to the market value?
We are not protesting. We have withdrawn our protest of the trade leveling of bringing up our manufactured asset to a retail value. I believe that this audit, one of the things, and it's part of the amount that we are actually agreeing to, is the additional value that the assessor put on the assets to bring them to a trade level.
That was a lot of verbiage.
We are not protesting it.
No. All right. Then, in effect, what you're basically talking about is timing.
We're talking about timing and the inability to actually provide the documentations to the auditor during the audit.
All right. And then under timing, you want us to determine today the timing on all of these assets, but you've never furnished the information to the assessor's office.
What we're asking is a continuation of this, of a decision by you to allow the assessor's office and the appropriate people to review the documentation that we are presenting.
So you're asking for a continuance so that the assessor has an opportunity to see what you provided?
We would like to have the assessor review it and determine whether they will accept the documentation on there, and then have it brought back before the board once the assessor has had the time to review the documentation.
Assessor object to that?
No. No objection.
That would require you to come back for another hearing in 30 days?
Well, possibly if they don't reach a stip.
Yeah.
They could
On
stipulate.
that, if we can reach a stipulation, do I have to reappear?
No.
If not, I have relatives in Riverdale, Clovis, Fresno, Modesto, and I will come back and visit my relatives.
But if you don't come to a conclusion, then you would have to...
If we do not come to a mutual agreement on it, then I will come back and be willing to come back before the board. If we reach a stipulation, can we do it with a non-appearance?
That's approved. That's acceptable
correct.
to the assessor.
Okay.
Board members.
Is 30 days enough?
I think we just make a motion to continue this to our next meeting, and we'll just give the auditor some time.
It is 30 days enough for the auditor. There's 168 assets.
Yeah, we don't have a problem with this. I mean, if we would have had this during the audit, we would have probably resolved it at that time. It's
Right.
just,
Yes, it's an issue that would have been
it just
resolved
wasn't able to.
easily if we had been able to focus our attention on this audit.
Yeah, 30 days is plenty of time. We're fast.
Okay? Then, go ahead.
I'll make a motion that agenda item number 6, IGT Inc., be continued to the November meeting. 17th meeting,
2014. Have a motion. Do I hear a second? Second. We have a motion and a second. All in agreement signify by saying aye.
Aye.
All opposed? Hearing none. Motion carries. See you in 30 days unless you can work it out. I'd like to take a 5-minute break, if it's okay with everyone. And we'll be back here promptly in 5 minutes to continue. Okay, I'd like to reconvene Assessment Appeals Board hearing for Tulare County, October 20th, 2014. I'll reinstate again that my name is George Azunian. I'm the chairman. We have William McKinley and Lance Morris as the 3 panel members, and alternates. We have Matthew Graham and Glenn Fowler. So continuing with our agenda, we're going to move down to agenda item number 16, Charles Nichols. If you'd like to come forward, sir. And if the clerk could swear you in and then read in the applicant number.
Okay. Do you solemnly swear or affirm that the testimony you are about to give in the matter now pending before the Assessment Appeals Board is the truth, the whole truth, and nothing but the truth?
So help me God.
Please state your name for the record.
Chuck Nichols.
Okay. I'm going to read the application number. 2013-00118, APN number 075-300-017-000.
Okay.
Mr. Chairman,
Go ahead.
what we have to do first, since your board has already denied this for non-appearance, the first thing he has to do before we get to the merits is provide you with evidence establishing to the satisfaction of the board excusable good cause of the failure to appear.
Read the last part of that again. I'm sorry.
Excusable good cause. So he first has to satisfy you that there was a good reason for him not to show up last time.
So, Mr.
Because
Nichols,
I was 5 minutes late and you didn't have anybody else and you were gone. There was nobody
you
at
know
the-
something? We did have a fast meeting last time. What
did?
time did we adjourn?
You had to adjourn at 10
About
after.
10 after 10?
And I got here right after that.
Yeah.
It took me 45 minutes to get here from Goshen today. I got stopped by 2 rail cars.
Yeah. You know, did you know the meeting was at 9 o'clock?
Yes,
Okay. And you were just late?
I was late.
Okay. Well, I'll turn it over to the board and see what the other members have to say.
The clerk is checking to see what time we adjourned on in September.
It was at 9:20 a.m.
That we
That was
adjourned
pretty
at
fast.
9:20. That was pretty quick. We're very efficient.
Well, from what I understand, I was the only person on the list or the agenda
Right.
that day. So I'm sorry about that. I'm normally early always, but not today or yet or then.
My first question is, what's the assessor's position?
The assessor, in this particular point, agrees with Mr. Nichols. I mean, life does happen outside of the 4 walls of this building, and so I would be fine with the board going ahead and recognizing the application moving forward.
I don't have a problem with it.
Neither do I.
Let's do a formal motion just since our
Yes.
clerk likes that.
Do I hear a motion to hear Mr. Nichols' case after we had shown his non-appearance?
So moved.
Second.
Have a motion and a second to hear your case. All in favor signify by saying aye.
Aye.
All opposed? You're on.
Okay.
Does Tim need to be sworn in?
He will if is this real property?
This is real property.
Okay, so yes, we do need to swear you in then, too.
And additionally, I'm going to ask Nick Galicia to come forward as well, so he can get sworn in.
I'm
going to swear you in. Do you solemnly swear or affirm that the testimony you are about to give in the matter now pending before the Assessment Appeals Board is the truth, the whole truth, and nothing but the truth?
I do.
Please state your name for the record.
Nicholas Galicia.
Tim Kokendorf.
Okay, Mr. Nichols, why don't you give us a summary of what this is all about?
All right. I bought, in the last 8 years, I bought two pieces of property. One that I reside at as a business, and then I bought the next piece maybe 3 years ago now, just to the contiguous to my property. And the property I got originally, I bought for $85,000. It was taxed. They were taxing, the assessor was taxing for somewhere around the vicinity of $840,000. It was a business that was run 24/7 by a company called Koch Materials. I came to the board and begged for less taxes, and they gave it to me at $85,000. My tax bill is $1,600 and some dollars a year. I am here to contest this $220 since I paid $110 for it, and I'm being taxed at a value of $220. And I'm paying $2,400 worth of taxes, and there's nothing on this property, and the other property is a business, a running business, with tanks and pumps and a scale and an office. And
I'm a little confused. Are these next to each other?
yes,
Okay, so you bought the first one. What had what on it? Just bare ground?
tanks, storage tanks, a scale, pumps.
Right.
A
Then you
shop.
bought the piece next to it, and what did it have on it?
Nothing. Well, it had a bunch of equipment on it that disappeared.
Okay.
But there's a building on it, but the building has to be demolished. It's not safe to.
Okay.
And you paid how much for that property?
110.
110.
And what year?
3 years ago.
3 years ago.
I paid $22,000 worth of back taxes too, so I figured I got about 9 years worth of free taxes that I've already paid for.
Okay. Makes sense.
Well, the guy had never paid his taxes, and I did. I had to pay him up front
right.
when I bought the property.
So your entire case is that you bought these two pieces of property for X, and that you ought to be assessed on that purchase price.
Yes.
Okay. And
I
one
was on the first piece.
Yes.
And I think
the
I
second
should be on
piece
the second piece.
you bought for back taxes?
No. I bought, the guy had a note on it, and I bought the note.
I see.
And then foreclosed on him because he wasn't
I
making
see.
payment.
How much was the note?
110.
Gotcha. Anything else you'd like to add?
No.
Okay. Any questions? Then assessor's on.
Chairman, I'm going to ask Mr. Galicia to go ahead and present this particular case. Just to kind of preface it, the assessor, when looking at the $110,000 note that he's purchased and then foreclosed on, looked at the overall value and decided to go with a market value instead of that particular value because it was more indicative of what it was actually worth at the time. And so Mr. Galicia is going to indicate to you how we've come to that conclusion. So with that,
Thank you.
And I need your name and title for the record.
Oh, okay. Nicholas Galicia, Nicholas, Galicia, appraiser 2.
Thank you.
Okay. Good morning, Mr. Chairman, members of the board, and staff. I'm here today to discuss the valuation of Assessment Appeal 2013-00118. The property is a 4.65 acre property located in Goshen at the address of 6572 Avenue 304. The property is zoned light industrial which is relative use for the property in that area. Give you a little background on the sales history of the property. The applicant purchased the property in June of 2012 at trustee's sale, in which he was designated as the foreclosing beneficiary. It was determined by our office that the applicant's purchase price of $110,000 at trustee's sale was not indicative of fair market. Here is an overhead view of the property with its location on Avenue 304, with the nearest cross street being Road 68. It is located west of Highway 99. This slide shows an overhead view of the property as it may have been at the time of purchase. The sole improvement on the property is a 3,200 square foot metal shop building with an estimated year built of 1950. Here is a street level view of the property from Avenue 304, in which you can see the only improvement on the property, the metal shop building, and its accumulated deferred maintenance. Here's a breakdown of the property's determined fair market value at the time of the 2012 change in ownership. The appraiser determined the land value to be $200,000, and a lesser value was given to the structure of $20,000, for a total of $220,000. That's kind of small print, but this slide shows a copy of the trustee's deed of sale, which is actually the last exhibit in the report, which states the applicant, Charles E. Nichols, acquired this property as foreclosing beneficiary. His sales price of $110,000 was determined by our office not to be indicative of fair market. All right. To estimate the land value of the subject property, the appraiser utilized the market approach. The appraiser first sought to establish the land value by analyzing comparable commercial land sales in order to establish the market. The sales collected were compared to the subject site on a price per square foot basis. Here, comparable number 1 is located on North American Street in Visalia, with the cross street being West Grove. It is approximately 4 miles from the subject property, located off West Goshen Avenue, east of Highway 99. It is zoned light industrial and sold for $2.77 a square foot. Comparable number 2 is located at 8293 Goshen Avenue, with the nearest cross street being North Plaza Drive. It is located approximately 4 miles from the subject property, east of Highway 99. It is zoned light industrial and sold for $2.07 a square foot. Comparable number 3 is located on the corner of West Riggin Avenue and Road 72. It is located approximately 3 miles from the subject property, east of Highway 99. It sold for $1.02 a square foot.
What's the zoning on that one?
Zoning on that one is commercial. Comparable number 4 is located on the corner of West Riggin Avenue and Road 80. It is approximately 3 miles from the subject property and located east of Highway 99. It is zoned heavy industrial and sold for 93 cents a square foot due to its large acreage size of 34.16 acres. Comparable number 5 is a ponding basin located between West Riggin Avenue and West Ferguson Avenue, with the nearest cross street being North Plaza Drive. It being a ponding basin, it was given low weight and consideration in evaluating the subject property. It was used to show the lowest end of the market for industrial property. It sold for 75 cents a square foot. When we consolidate the 5 comparables to one slide, we see a price per square foot ranging from $2.77 to 75 cents. It's worth noting that the applicant's foreclosing sales price of $110,000 or 35 cents a square foot is well outside the range of the market's price per square foot, so we were unable to come to the applicant's opinion of value. Since at the time of sale, the property had lots of abandoned equipment and required extensive cleanup and high cost to cure, our appraiser chose a very conservative dollar per square foot, which is on the low end of the market. When we multiply the property's square footage by the indicated price per square foot, we arrive at a rounded land value of $200,000. The structural property was valued using the Marshall and Swift costing table for a light commercial utility steel building. When we multiply the 3,200 square footage by the square foot cost, we arrive at a replacement cost new of approximately $78,000, to which our appraiser made a liberal depreciation adjustment of 70% for the property's deferred maintenance and age, which left us with a round property value of $20,000. So in summary, the appraiser's opinion of fair market value that was enrolled for the change in ownership gave $200,000 to the land and $20,000 for the structure, for the total real property value of $220,000. In addition to comparable sales data, appraisers often use current listing information and other available data in order to better establish the local market. This sale is for adjacent property next to the subject property. It sold less than a year after the subject property. We wanted to bring this sale to your attention because it is a good indicator of value for the local market of the subject property. While we did not use it to value the subject property, its price per square foot of $1.60 shows that our indicated MVI of $1 was an accurate reflection of the local market. And that's our presentation. Thank you for your time.
Panel members have any questions?
I would advise the board not to consider the indicator of the current market. That's too late.
That's fine.
To clarify, Mrs. Grunwald, it's not an indicator of the current market that we're using it for. It's an indicator that the valuation at the time of the change in ownership was accurate, because recent market sales, actually not recent, market sales near that time would show that the dollar per square foot that we valued it at is just.
But this was in 2012, right?
Correct.
So
They
we
can't consider it.
anything more than 90 days after that.
Correct, for the actual appraisal. That's just a market indicator.
Well, there is some extenuating circumstances there that you don't know about. Is the
We're not
propane-
submitting it for you to consider it for value.
Correct.
Then I'm saying you just don't consider it at all.
That's not a problem with me, okay? When was the date of this transaction when you purchased it? Purchased the note.
Oh,
Well, he foreclosed it.
December 2011, I believe,
And then you foreclosed on it when?
right after the first of the year.
Right after the first of the year. So
June- the deed was
January
recorded in June.
2012.
Somewhere in that area.
The deed was recorded June 26, 2012.
But 28th.
Or 28th, I'm sorry.
But
So we're looking at 2 years.
That property that he's referring to, that last comparable, that was purchased by the propane company that was renting from my other spot down below, and they were required to get out of there by a certain date, so they had to buy something.
Right.
So they were forced to pay a little bit more because
Well, I'll tell you what, let's do this on a little bit more on an organized basis. Does the panel members have any questions on the assessor's presentation?
I had a couple of questions on some of the comps.
Okay, go ahead.
I know a couple of these sales that you guys brought up here, and it looks like, I know comp number 1 is right next to American Ink. And I'm just wondering, is some of these sales, are they bought by neighboring parcels which might have, driven up the price per square foot? Whenever I see sales going on in the market, if it's bought by a neighboring parcel, usually they'll bring in a higher price per foot, which in turn can sway, your guys is saying, hey, it's going from $2.77 to 75 cents a foot.
Right.
And there's not a lot of information on these that say, the conditions of the sale.
Right. Well, we checked a range of comps for this, and there was no comps. The comps didn't show that they were bought by a neighboring owning parcel, so these were straight sales.
I think at least 2 of them were.
Okay.
And sales number comparable for that large parcel. It's hard to compare 5 acres to this large sale of 34 acres. This was bought by DDG. So, you know, I
Right.
mean, that's my only point. Is it's hard to compare when you're looking at comparable sales like this, and you don't know if it was a neighbor buying the parcel. I mean, what are the conditions of the sale in order to consider them comps to the subject property?
Glenn, do you have any questions, observations?
No, these were all arm's length transactions, weren't they?
Yes, they were.
No, I have none at this point.
Okay.
We'll fill the last comp out.
And the
Number
last...
5.
Oh, 5? Oh, the Pawnee Basin?
No.
The Pawnee Basin was just to show the bottom barrel
Bottom
of the
barrel.
market. And so to show that the Pawnee Basin sold for 75 cents a square foot, and he's arguing a value of 35 cents a square foot, it just doesn't fit within the range.
I'd like to go to the applicant and ask you to rebut what the assessor has to say and give us some additional information regarding what's going on here that we don't know.
Well, first of all the comps, I believe, except that last one that you threw out, are all on the east side of 99, in the busy part of town, the busy industrial part of town, which is also more expensive, number one. Number two, there was a large expense getting rid of all the equipment from all that property as well. Plus, I've got a piece of a building that's not worth anything. It's got to be torn down. It's not safe to. It couldn't be remodeled because it's all wood frame and it's all open and dried out wood frame. It'd be very unsafe, so it has to be taken down. And I don't think I should have to pay taxes on an unusable piece of building.
Is there any properties come to mind adjacent or close to yours on the west side of the 99 that would have a value closer to what you're claiming it's worth?
I don't know. I haven't done any comparable shopping, so I don't know. But I've always, I guess I'm wrong that the law was made that you buy a piece of property and you're taxed 1% plus whatever the incidentals are according to the value. And I'm from the old school, and if that's the way it is, that's the way it ought to be, and I shouldn't be get gouged for anything else.
I understand.
Twice now you've mentioned that the building is unsafe.
Yes.
All right. Have any evidence, or has anybody condemned it? Has anybody said that it's unsafe?
No. It's unsafe because it just hasn't been used in 12 years.
Are you referring to the 3,000-foot building that's on it? Yeah, okay.
Metal building.
Open. Some of the corrugated metal is off of it, and it's just dried up wood. I wouldn't take a chance of getting up there trying to fix it.
So, in effect, 3,000 square feet into 20,000 in value is $7 a foot. And what you're saying is not worth $7 a foot. It's going to cost you $3 or $4 a foot to tear it down.
Yeah, I don't know how much it's going to cost me to tear it down, but that's coming.
Maybe $10 a foot to tear it down.
To speak to that end, Mr. Chairman, when he does demolish the building, that value will get removed off his property tax bill. So
I understand. But what I'm getting at is that if that's the case, then eventually you could wind up reducing the assessor's value by the cost of removing that building if you're considering it to be, in effect, let me ask you a question. Did you intend to use the building when you bought the property, or did you intend to clear it all out?
Well, I looked at it and I thought maybe I could do something with it, but since I got into it, there's no way I can.
I see. Okay. Yes.
One of the things that they talk about in determining fair cash value is that neither party can take advantage of the exigencies of the other. In other words, nobody can take advantage of the other person's problems. Is that true in this thing, or did you take advantage of the owner to acquire this property?
No, I didn't take advantage of him. He's got never made his payments. So
was
he
the
didn't
property?
make his payments. taking the property back.
Was the property for sale?
Well, it was in a sense, but nobody wanted to pay the money he wanted for it. And nobody wanted to have to deal with all the equipment. There was 56 trucks and used junky trucks all over the place, and nobody wanted to deal with any of that. So nobody would come up with any money to pay for it, to buy it.
Okay, but was it listed with a broker, or
No.
was there a for sale sign on it?
There were people that come in there trying to get that to sell, trying to get it to sell it, but the guy wouldn't return phone calls and things of that nature. So I worked diligently for a couple of years trying to get that property off, get it squared away, because it was a eyesore for the neighborhood, for one thing, and I wanted to get rid of all that equipment. If I could find a way of getting the property, then it's just a benefit to me as well, because I have the other 5 acres that's to the north of it, and I wanted to build a road directly out of the place rather than go through.
That 5 acres that you have next to it,
Yes.
and this may or may not have a direct effect, but what do you think the value of that piece is at the time you bought this?
At the time I bought that, it was probably worth about $700,000.
That 5 acres? Why?
All the equipment that was on it.
What equipment?
Tanks.
Okay.
Tanks, pumps, shop, scale, 80-foot scale, office.
All those improvements.
All the improvements were there. It was like they took a break, and I turned the electricity on, and it went to work. I mean, it was
Right.
incredible. It was the best deal, and it's the best buy in the countryside I've ever seen.
Okay.
I paid $85,000 for it. On the company called me and said, "We'll send you a bid. We're going to auction it off," and I got it.
The 5 acres?
Yeah.
For $85,000? Really?
Yeah. I mean, wonderful deal.
Would you say this was a distress sale?
A distress sale?
Obvious this was a distress sale, wasn't it?
I don't think it would be considered a distress sale. The man's a millionaire, had the property, and wouldn't make his payments.
Still a distress sale. I mean, he had to sell it. Did you
Didn't have to
discount? What was the original amount of the discount on the note?
Was the face of the amount of the note 110, or did you discount?
160, I think.
It was 166.
165,000. You discount. They discounted you to 110. Is that correct?
Yeah.
Wouldn't you call that a distress sale?
I call it a little bit of a bargain myself.
You got a good point there.
I wouldn't say if a man's a millionaire and won't make his payment.
Yeah.
Right.
It's a distress sale. That's.
Yeah, sale. But that was not representative of the market value of this property.
Oh, of course it wasn't representing the market.
I think
thought, like I said earlier, I thought if I buy a piece of property, it's
Right.
Proposition 13, it's on the value of the property. I didn't realize that these guys have tweaked this a little bit.
No, they're required by law to do it at the market value.
Market value.
And so if the purchase price is not the market value, then they have to change it.
Well, going back to again,
Not at all.
we've come up with some additional information here from you. It's only fair to let the assessor rebut your information.
The only thing that I want to say is in our report, if you look at page 5, right after the first paragraph, it says the appraiser determined that the sales price did not meet the criteria set forth in the California Revenue and Taxation Code, Section 110, or Property Tax Rule 2. Therefore, the fair market value of the property was enrolled. And then a little bit further mid-page, we talk about the Assessor's Handbook 501, Chapter 2, page 9 states, the value standard for property tax purposes is the market value. Lower on the page, the stipulated conditions of market value are the amount the property would bring in cash or its equivalents, exposure on an open market for a sufficient amount of time, neither the buyer nor seller able to take advantage of the exigencies of the other, both parties seeking to maximize their gains, both buyers and sellers having full knowledge of the property and acting prudently. We believe the first bullet and the last bullet were met, but the 3 middle bullets were not met.
Anything else?
No.
Okay. At this point, let's summarize each of your positions. Then we'll poll the board as to what they'd like to do. And I'll let the applicant go forward, just basically, and you've somewhat done that, but just summarize exactly why, in 1 or 2, 3 sentences, why we...
I spent a lot of time and money getting this property and then cleaning it off on top of that.
Right.
And I believe that the law said if I buy a piece of property, it gets charged what the value is. That's it.
Okay. Same situation for the assessor. Would summarize your position.
The property was bought at foreclosure. We recognized that that was not indicative of market. Therefore, we had to determine the value. We determined the value by finding the range of value of price per square foot for the land, and then using Marshall and Swift to value the structure, giving it a liberal depreciation. And we had to value it according to market, and that's what we did in this case.
Okay. Typically, in a case, most cases that are fairly complicated, take it under advisement and go to closed session and discuss it. However, I'd like to poll the board and see what the rest of the panel members would like to do.
I would like to ask one question under the rebuttal. How can you establish a $20,000 value on a building that's not safe to walk into?
Mr. McKinley, he even listened to the applicant. There was consideration in the purchase given to the building prior to his actual investigating the fact it was useless. So at the time of purchase, even the purchaser was giving value to the building. So that's how we justify it. If the market participant is acknowledging that there is market value in his consideration given, we have to as well.
I'm sorry, Tim. Tell me again what you just said.
Sure. The applicant himself in the hearing had let us know that he had given some consideration in the purchase originally for the building.
All right, that's good.
Because my general point is because the actual market participant did, we have to as well. And it works out to his benefit because we'll get to remove the value in the end.
In other words, if he would have bought it with the intention of leveling it, clearing it out, which you have as a value of land, which is what he paid plus the cost of getting it to that point.
Correct.
Okay. Mr. Morris?
I'd prefer to take it under advisement.
Okay. This one I could go either way, and in basically siding on the side of caution, we'd like to discuss it amongst ourselves, and typically we will come up with a solution and a conclusion within 60 days.
Findings of fact wasn't stated on the application. Is that
right?
Oh, that's
they're
correct.
Requested by the assessor. They were requested by the assessor, but not by the applicant. So
he didn't mark one way or another.
Yeah. No, he didn't request
He didn't
findings.
pay.
Okay. So we'll take it under advisement, and you'll hear from us.
Can I just ask one more question?
Sure, go right ahead.
It isn't on the page I'm looking at, but it looks to me like although you could defend a value of $1.60 a square foot, what you actually enrolled was $1 a square foot.
Right. We wanted to be conservative in our estimate.
Okay. Thank you.
Yes. Very good. We will come to a conclusion, and you'll hear from us within 60 days. Thank you very much.
Thank you.
Is there any other business that needs to be brought before assessment appeals?
Well, we have several housekeeping pieces.
Yeah, before we get to that, number 18, I want to bring to the board's attention. They're on for non-confirmed. They actually sent their confirmation in late, or their request for postponement in late. I advised the applicant that it was, or the agent, that it was sent in late and that he would have to appear today to ask for postponement. He didn't really agree to that, so I'm coming to the board to ask for him if you guys will agree or you'll approve that it be postponed.
Well, number 18, how about 19?
Which number was this?
Number 18, NetJets International.
Yeah, but what's the difference with 18? In other words, why shouldn't we just deny 17 through 22? Well, 22 is a withdrawal, 21 for denial for non-appearance.
Can
Any
I add
difference?
something for number 18, please?
Okay,
For
go ahead.
NetJets. That's a fleet aircraft, so those are the aircrafts that land here at the local airports just in and out. And so we value them like that. Based on the number of arrivals and departures, that's how we value them. So LA County is really charged by the state of California with valuing the aircrafts, and then we get our percentage for the time they're here. LA County has an appeal right now that they're almost ready to settle, and they haven't come up with a new value. And so that's why NetJets is wanting to hold off, because they're waiting to find out what
Do you
LA
agree?
County, yes.
You would agree to continue it then?
Yes, because we just don't have any information to say that
Okay.
the value should be changed or not at this point.
Okay, so in other words, 18 then will be, because it's on the agenda, we would have to have a motion on a continuance, correct?
Right.
Postponement.
Or postponement?
Yeah, the board's, what your rules actually say is that if the request, this was the first time it was on for hearing, right?
Yes, this is the
Okay.
first postponed request.
What it says in our rules is that if the request comes in less than 21 days before the hearing, that you can grant it if the other party doesn't object.
Okay.
Was it at the wrong time or something, or you just forgot that was what was in the rule, or?
No, I was just getting clarification.
Okay, because
From the board.
you can grant the postponement request
Okay.
if the other party doesn't object. So is that what you told him, essentially?
I can tell him that. That's fine.
Okay.
Okay, so then the board can do one of two things. You could do a formal motion to approve the postponement, or you can just say, send it back
Just
to the
ask the
clerk.
clerk to announce that they're going to have a postponement.
They did let him know, but before
Yeah,
the
I
hearing,
think that's
but it
what we'll
was
do
late.
on this particular one, because the assessor is saying that there is another jurisdiction that's going to be doing something, and we should be waiting. So why don't we just go ahead and have the clerk indicate to them that it is being postponed to a later date. You can reset the date.
So we'll treat it as a clerk's postponement,
Mm-hmm.
and so then it's just really sort of not on this docket then. Okay.
Okay. Okay, so bringing us back to, we have a bunch of withdrawals which we'll consider with the withdrawal calendar. And then we have some denials for non-appearance, which, as far as I can tell, are agenda item number 2, agenda item number 13. No, excuse me, that's a withdrawal. 17.
That was the withdrawal.
17's a withdrawal?
Yeah.
Oh, I'm sorry. Yeah, I didn't look to the bottom of the page. So it would be 2, 19, 20, and 21. Okay?
Yes.
Do I hear a motion?
I'll make a motion that we deny for non-appearance agenda items number 2, number 19, 20, and 21.
Do I have a second?
May I modify that to go ahead and add the withdrawal? Oh, no, wait, so these are the non-appearance.
We're going to do the
Never
withdrawal
mind,
calendar
sorry.
when the
Sorry.
withdrawal separately. So we got a motion. Do we have a second?
Second.
Okay. All in favor signify by saying aye.
Aye.
All opposed? Hearing none, motion carries. Now let's do the withdrawals. And they're nicely marked in red, so we shouldn't miss any of them. Okay? Yes. go
I'll make a
ahead.
motion that agenda item number 3, 4, 7, 8, 9, 10, 11, 12, 13, 14, 15, 17, and 22,
And the withdrawal calendar.
and the withdrawal calendar being withdrawn as stated.
You have a second?
Second.
All in favor signify by saying aye.
Aye.
All opposed? I think we've gone through the calendar.
And then
Mr. Azunian, number 5, I need a motion on
Yeah.
continuing.
That's the one we.
the formal motion to continue, which
that
we
was the one
apparently
that's
forgot to do.
half stips and half continuance. Agenda item number 5. Do I hear a motion to continue the first 4 applications on that agenda item?
So moved.
Have a second?
Second.
All in favor signify by saying aye. Aye. All opposed? Motion carries. Now I think we've got them all.
Now, have we continued 6?
Yes.
We did that
We did a
one
formal
already.
motion on that.
We already
Yes.
continued.
Okay.
And we've already continued number 16, correct?
Well, we concluded the hearing and took it under advisement.
Yeah. And that agenda item 16, because we have the other 2 that we heard as continuances, number 16 we're going to hear in closed session.
Correct.
Okay? Okay, any other comments from the assessor?
Just one for Board Member Graham and maybe some of the additional board members. It seemed today in the hearing you'd like maybe a little bit more detail in the packet if you're going to have to make a decision in the future.
Yeah, I think just on the comps, just the condition of the sale, I think is so important.
You're looking for the parties involved?
Not so much parties involved, but I mean, if they were, like was brought up today, if they're distressed, if they are neighboring, I always find out in the industrial park that a lot of the values can get swayed due to different people, a neighboring parcel buying it or somebody needing additional yard space, and they will pay more than somebody looking, say, to just as an investment property. You just can't pay the same. An investor can't pay the same for an industrial piece of property as a neighboring guy can. So that type of detail would be nice in those reports.
Thanks. I'd be glad to provide that. We've made an effort to abbreviate the packets and hearings as much as possible to get to the pertinent evidence, so my apologies for not having it today.
I think we could all appreciate that. I think maybe just a couple lines of the condition of the sale would be great.
Absolutely.
At the time Mr. Graham was bringing issues up, I thought in the back of my mind how we are, because I have, my career is kind of 1 foot in accounting and 1 foot in real estate. And we have 2 excellent CPAs on the board. And sometimes we get into accounting issues, and I just love that. And then Mr. Graham has brought up real estate issues, and I love that too. Okay, and Glenn is kind of you're a little bit different than the appraiser and a broker, so he comes up with a little different perspective. But in effect, it struck me today in that Mr. Graham's bringing up issues that these CPAs wouldn't bring up. Okay. And in effect, my background, and I, in a small community, unfortunately or fortunately, brokers that have been around for a while generally will do all 4 or 5 disciplines, and each one of them have their own little quirks. But your comments were refreshing, to be honest with you. Thank you.
The assessor will make efforts in the future to make sure the board has all the information they need to make some decisions.
Yeah.
I apologize. Like I said, we've just tried to keep the packets as brief as humanly possible to get down to the pertinent issues.
Sure.
Anything else?
None.
Go ahead.
I have a comment. I believe that we should charge the assessor's office for entertainment. It seems like a great deal of the audience is enjoying what we're doing out here comes from the assessor's office.
How do you put a price on something so priceless?
I'm curious, Christy, what's your timeline? Under certain assumptions,
Well, Plan A, we will say, is everything remains the same. Plan B, if I get elected, the election is November 4th, but I won't take office until January, so I'll have the pleasure of seeing you all at least in November and December.
Good. What are you running for?
Assessor. Kings County.
Kings County.
Oh, Kings County.
Yeah,
I live in
she'll be
Hamburg.
leaving.
Mr. I've just gone blank on our assessor's name.
I'm sorry?
I've just gone blank on our assessor's name.
Mr.
Roland Hill.
Mr. Hill.
Roland.
Mr. Hill did not have an opponent in the June elections, so.
And I certainly would not run against Mr. Hill.
It's been,
Okay.
you can run against a sitting us, but it's.
And lose, probably.
Awkward.
Okay, hearing no further agendas or items to discuss on our Assessment Appeals Board for October 20th, 2014, The meeting is now adjourned.
Good luck, Christy.
Yes, good luck.
The Assessment Appeals Board for October 20th, 2014 is now back in session from closed session. Regarding agenda item number 16, Charles Nichols, application number 2013-00118, APN number 075-300-01700. The board has come to a conclusion, and do I hear a motion?
I make a motion that we find for the assessor.
You have a second?
Second.
All in favor of accepting the motion to accept the assessor's value signify by saying aye.
Aye.
All opposed? Motion carries. There is no further business in our closed session, so the Assessment Appeals Board for October 20th, 2014 is now convened.
I will mention to Julia,